Okay, today we're taking a look at one of my favorite and most accurate strategies I use in futures trading all the time. And we've actually talked about this strategy on the channel before, but we're talking about it with a slight twist. Let's go ahead and dive on in. All right, greetings and salutations, and welcome back to the channel. Today we're taking a look at the 50 exponential moving average, crossing above the 200 simple moving average. Now, we have talked about this strategy before, and we've even actually made a video about it, which I will link below. But I did promise a slight twist to this, and so let's go ahead and dive on into the charts and take a look at what I'm talking about here. Okay, so here we are on the Trade-of-8 charts here. Now, for clarity purposes, I've removed some of the other moving averages that I use on a daily basis to make the chart a little bit cleaner to look at. Many of those moving averages, like the 9, the 12, the 35, and the 26 simple moving average, can actually be used in conjunction with the strategy that I'm about to share with you. But it's not necessary. This strategy can actually stand on its own completely if that's what you prefer. So I've got the 50 EMA marked out in green here. It's this green line that you see, while the 200 simple moving average is marked out in red. That's this red line that you see here. This other line here, this purple line, is the volume weighted average price, and the dotted line is the upper band of that volume weighted average. Having these marked out in green and red, for me, helps me determine which direction I expect the instrument that I'm trading at the moment to go based off this strategy. When we're looking for the green 50 EMA to cross above the red 200 simple moving average, that's a long base strategy that is incredibly accurate. So the crossover right here, and you can see I've actually highlighted this with a circle, as well as down here on this back part and right here. So this crossover here is our intended entry point. This is the area that we intend to enter into the trade going long. Now, the exit points I've marked with a rectangle. Let's see here. So here's an entry point on the crossover and an exit point on the downward crossover. So there's two different ways that we can approach this in order to gain profit from it. The first method is to enter at the crossover, the 50 crossover on the upside, and then exit at the crossover on the downside. So that's method one. The other option is a take profit. Now, a take profit makes more sense in situations like this, where you can see we got the 50 crossover here, but it did actually fail on this one, and so we would have a take profit set up to be able to take profit up here in this zone before the exit point. Now, if we were automating this, then we could automate it either with a take profit or with a crossover here, or we could put a take profit and have the crossover be our exit point with a stop. So that's something that we can do in regards to that. Personally, I prefer the take profit method, where where if I'm getting in here, then I'm taking profit in this zone here before our crossover actually happens. And in doing so, basically we're going to decide what is the minimum profit that we're after, and then having our stop be at the crossover on the downside. So this strategy works on multiple time frames, from the 1 minute to 3 minute, 5 minute, and 15 minute. But few of them are quite as accurate as the 20-second chart. You see up here, it's the 20-second chart. And I know you heard me right, that is the 20-second chart. Now, hear me out here, okay? So normally, this strategy is often applied more on like the 1 or the 5 or the 15, and the 15 being incredibly accurate with this particular strategy. All of those have a pretty high degree of accuracy, especially the 15, like I mentioned, but the 20-second offers something very unique. So the 20-second chart offers around the same level of accuracy as the 15-minute chart, but it offers a lot more opportunities to actually take those trades along the way. It also offers us information as to where the chart may be going on some of the longer time frames, like the 1, the 3, the 5, the 15, etc. But it lets us know ahead of time. It's really, really useful. So let's take a, like I said, here's a few examples here. So currently, when the market closed last, there was a 20-second crossover right here at 12:35 p.m. on Friday. And this 20-second crossover of the 50 EMA and the 200 simple moving average ran all the way up to the market close. So one could have gotten in here at the crossover and closed out anywhere along this line and had a very high, very, very nice trade. Same with back here at 10:54, 10:55 or so, right around 11 o'clock on Friday. That is Pacific time, of course. That crossover there, and one could have taken profits along this way, all the way below the volume weighted average price, and definitely you would have wanted to have gotten out by the time this crossover happened. But this move, you can see, went from 41.45 all the way up at this crossover point at around 41.55. That's a $10 move, and if you're trading futures, that equates out to 40 ticks. That's a lot of ticks, a lot of opportunity there. Now, in this other example, where you see that it wasn't quite as accurate, you can see that this crossover happened, and there was still an opportunity to take a trade with a take profit. So that's one of the reasons why I prefer the take profit, is because it lets us really know that we're locking in those trades, we're locking in those profits. Now, if I zoom out on the day, I'm going to zoom out here a couple of times, you could see that most of the day was very bearish on Friday. On this was Friday the 14th, was. So you can see that most of the day was very bearish, and so without this crossover on the 20-second chart of the 50-200 cross, there's not really a lot of opportunity to take longs. Sure, you could have taken some bounces along the VWAP or down here along these lows, but few trades really had the accuracy that was here. And you can see here, even at the open right there around 6:30, 9:30 Eastern time, you can see, pull up a little shape here. We'll grab an ellipsis and then we'll just click on it. Bing. You can see there was an entry point right there on that crossover, and we go over here and grab our rectangle. You can see that you could have got out on the crossover on the downside, and you also could have gotten out during a take profit zone here. So 2 opportunities to get out. Both of them would have been great trades, but definitely a lot of opportunity throughout it. And this is by far one of the most accurate trading strategies that I've been using recently to have an extremely high trade accuracy. And the more I get comfortable with it, the better I'm getting at it. You can also utilize this strategy that we've talked about in the past on some longer time frames. I mentioned that earlier. And when you look at this on like a 15-minute chart, it's incredibly accurate. I'm not going to go into too much in depth on that portion of things today. It's kind of the same information, just on a longer time frame. But like I said, what I really like about the 20-second chart is how many opportunities it gives you in order to take trades. And you can use the same strategy in reverse to the downside as well. So if you're more of like a short trader, your entry point would be here, short, and your exit would be on the crossover, which you can see is all the way down here. So you really would have just been letting this trade ride for a lot of the day on short-based strategy. So if your entry would have been right here, right where the that exit point was, and your exit would have been here, right on that entry. So you can see it's an incredibly powerful strategy in both directions. I personally prefer the long direction just because I kind of like going long. To me personally, I don't really have too much of a bias, I guess, in both directions, but I like a lot of the long trading strategies because I think that that are a little bit more predictable for me. So that's it, guys. I hope that you guys got a lot of value out of this video. I hope that there's something in here that you can take to your trading that makes your trading a little bit more accurate, a little bit more profitable. And yeah, let me know what you guys think and feel about this in the comments below. And also, do you guys have any other questions? Is there something that you would like to cover? Have you used this strategy before? And if you have, what are some of the things that you liked about it? What are some of the things that you didn't like? Thank you guys so much for taking the time to watch this video. I love and appreciate each and every one of you guys. Smash that like button if you got some value out of this, and we will see you guys on the stream.